Well, hello. My name is Heath, and I will be presenting for my Group 3, including Guillermo Wolf, Hing Ta, and me, Heath Wing, to represent Tesla on our investment reports on Tesla. So I'm so sorry for this inconvenience. So currently my recording on the computer is not working. So I resulted into using the phone recording instead. Thank you for your understanding, and please bear with me. So first, when we talk about Tesla, we need to talk about the business of Tesla. What does Tesla do? Mainly, their motto would be about clean energy products, solar panels, EV charging station, energy storage. But recent years that they have been really profitable with their automotive industry, where their primary product is just electric vehicles themselves. Sales have been increasing recently due to the high demand, gas price spikes, and they're really profiting right now. And then we come to investment thesis though. Investment thesis, our strategies in how to profit onto Tesla divide into two theses. First one is the split news. Tesla has been doing a lot of splits recently. Like I'm accounting back into 2016 when they did like a 1 to 3 splits at a $800 strike price. And on 2020, they also did another split. I think it's a 1 to 5 splits at a $2,000 price point, and this time they're doing another split for another 5 to 1 at, I think at the current strike price they're trying to aim for is the $1,000. And with this strategy, we can expect a return of 2 to 3% when the splits happen though. So right now, since the dip of the Nasdaq of 5% on the Nasdaq, Tesla is taking a big hit. I think it's like a good opportunity to buy into Tesla at the $847 strike price. The next one is we will be taking advantage of the volatility changes. Here, when mentioning volatilities, we will be expecting mostly from the economy right now under inflations of 8.5% and expected recessions. A lot of companies on the indexes like S&P or the Nasdaq is really taking a big hit right now, and I think like if we could just use this opportunity to buy in lots of Tesla shares in the long run, the expected after 10 years return will be really, really high since we're doing what's called the dollar cost averaging strategy to benefit from the economic corrections. From the valuation that we have, the expected growth rate of Tesla sounds unreasonable, but from our calculation of the growth rate, it goes over 105% within the last 4 to 5 years. From 2021, it was 53 billion, and now 20 from the projected that we calculate from 2026 is it's almost like $70 billion, with the trend of Elon Musk and a lot of buying into the shares. They also trying to expand their operations because in recent years there's been a lot. If you go to job boards, you notice they've been trying to like open new factories in China, and they've also been hiring a lot of mechanical engineerings for one of their batteries projects. So. Okay, and for the risk, when mentioning risk, we need to mention the high beta. Right here, right now, Tesla has the most volatility since like the trade volume is almost like $82.6 million worth of trade every single day for Tesla stocks alone, since there's a high demand for the stocks. And the thing about Tesla stock is that investors need to understand the risk of buying a Tesla share. It's such to say holding a really long position for the next 10 years creates a lot of uncertainty among the investors. And with the problems with recessions and inflations though, the impact of their sales will put on strain on their operations, mean their operations will take a big hit and it will be reflected on the share price. That's why we got to understand the risk here is that let's just not do our best to like buy the dollar cost averaging, which is as low of the price as possible before they do the splits or before the economy start recovering. And lastly will be suggestions though. Some of the suggestions we have is that when investors buying Tesla TSLA ticker or Tesla should understand the risks that mentioned and be aware of loads of volatilities, because from what I'm understanding, high volatilities would means more opportunity, which also means that loads of risk from the market though. when we need to have like hedging strategies from the market in case of the economic corrections. And for the safest bet would be the Tesla on a long term, treat it as a long term investment for the next 10 years. And yeah, and these are some of our reports.